Hi there, in this video we'll be discussing facts that you may not have known about Bitcoin. Let's start with what Bitcoin is. It's a digital money, or it's also known as a form of digital currency. Some people even refer to it as cryptocurrency. Bitcoin is a peer-to-peer payment system that aims to take back control from the banking system. This means users can send and receive Bitcoins, the unit of currency, by broadcasting these digitally signed messages to the network using Bitcoin cryptocurrency wallet software. Bitcoin was created by this guy who we think was called Satoshi Nakamoto, but many people think that that's a pseudonym for his real name. Satoshi Nakamoto was a genius because when he created Bitcoin, he ensured that there was no central bank or authority to rule over the system. The value of a Bitcoin is determined by the supply and demand of the Bitcoin of that current day. One really cool thing that you can do with Bitcoins is you can buy things with it. As with all forms of digital currency, it's best used when you can spend it. In 2010, a man paid for 2 pizzas with just 10,000 Bitcoin. If he had just held on to those Bitcoin, he would have had millions of dollars. And I hope that pizza was worth it. Moving on, Bitcoin has a finite supply. In order to get Bitcoin, you need to mine them or buy them on a centralized exchange, with many being mined daily electronically from a computer. Every Bitcoin mined is confirmed through an extremely complex algorithm. This verification is done with many mining computers which confirm each other's transactions. When a miner verifies a transaction, he is rewarded with a very small amount of Bitcoin. This is the only way that a Bitcoin is introduced into the system, as there's no central bank to issue new Bitcoin, unlike our current monetary structure. In order to mine a Bitcoin, you need a very powerful computer. Many Bitcoin miners use hundreds and hundreds of computers in order to get the processing power that they need to mine a Bitcoin. So it may not be very economical, as you may need to spend more on electricity than you will make on Bitcoin. Mining profitability has many factors such as hash rate, block reward, mining difficulty, the electricity costs, power consumption, the pool fees, Bitcoin's price, and as Bitcoin are mined, the difficulty to mine these Bitcoins increases. The value of Bitcoin is very volatile. The value seems to be increasing, however, and some analysts project Bitcoin will be worth up to $400,000. Although it's very volatile, that hasn't scared off people from buying Bitcoin, especially because ATMs have been popping up that allow you to buy Bitcoin from them for cold hard cash or credit. The value of Bitcoin is limited to 21 million Bitcoins being allowed to be in circulation at any one point, and the rate at which people are able to mine these Bitcoin are halved every 4 years. This is known as the halvening. This means that supply will stop when we get to the year 2140. Although miners won't be rewarded after this, they will still receive some Bitcoin in the form of transaction fees. Some people are convinced that Bitcoin is used for black market transactions. However, it's actually terrible for these black market transactions because all transactions are verified on the blockchain, so the FBI can just track where the money is going. This isn't to say that Bitcoin and other various cryptocurrencies aren't being used by criminals to launder dirty money, scam victims out of their funds, defrauding investors, monetizing ransomware, or buying illicit goods. However, it's clearly not a good way to do this, as Bitcoin is very traceable. This lets law enforcement agents trace and follow the money back to the criminals. Because cryptocurrency is so new, Coinbase is allowing you to learn and watch videos about cryptocurrency, and you can earn cryptocurrency by doing so. So now you know that Bitcoin is pretty much just like cash for the internet. Many people think that as an investment, Bitcoin has huge upside potential, but that doesn't mean it doesn't come with its risks. Some of the risks include fraud, exchanges being hacked, technology reliance, block withholding, having limited use, and some financial loss, because some refer to it as a Ponzi scheme. Some people are also concerned that Bitcoin could get hacked because it's a very young technology and it still has some things to iron out. In total, corporations now own $30 billion worth of Bitcoin. Noticeable examples are Galaxy Digital and Square, with 448 million and 126 million respectively in Bitcoin. That was the video, guys. Subscribe for more interesting content.